there's our resource. We're almost 8.7 million ounces of palladium equivalent and about 915,000 palladium equivalent inferred. That's just under 4 million ounces of palladium in the property, 500,000 ounces of gold, and just over 1 billion pounds of copper. We're on the north shore of Lake Superior. We're about 30 kilometers west of Hemlo. We're about 10 kilometers from the town of Marathon. The infrastructure is quite good. You can see there's a little airport there. It's about a 3-hour drive from Thunder Bay. The Marathon deposit is just on the right there. That's where the majority, about 80% of that resource is located. The Trans-Canada Highway goes right through the property. There's a new power line the government is building, which is more than enough power to supply the mine. So we're very happy with the infrastructure. We optioned the project from Sibanye in the summer. We gave them $3 million in cash, $3 million in shares for 51%. For us to get to 80%, we have to spend $10 million on the property over the next 4 years. Quick update on the PEA that we put out at $1,275 palladium. We're about double that price right now. We have a net present value at a 5% discount rate of $870 million. Our IRs after tax 30%, and our payback is about 2.5 years. It's a very robust mine. Today, palladium is trading, I think, around $2,400–2,500. And if you look at the sensitivity, we put it out at $1,900. The project's got a $1.5 billion NPV and an IRR of 45%. Again, we didn't discuss that, but palladium is trading up there. So it's kind of nice to see the sensitivities on that side. There has been 2 feasibility studies completed on this. One was done by Marathon PGM in 2010. It's filed on CEDAR. After they did publish that feasibility study, Stillwater purchased them for $118 million US. A couple years later, Stillwater sold 25% of that project to Mitsubishi. Their plan was to put this into production. In 2014, they ended up canceling the feasibility study, or not filing it, and not going further along on their on the production decision, on the permitting. So Sibanye ended up taking over Stillwater in 2017, and since then the project's been under care and maintenance. So we spoke to Sibanye at the end of 2018, the beginning of 2019, before Palladium has had its run. And we're quite happy to get this project because we think this is it is the largest undeveloped palladium deposit in North America. Again, this is just our plan going forward is to do a feasibility study, and we're going to look at doing some of these different scenarios here. As mentioned, only 37% of that resource isn't actually in our PEA. So when we do our feasibility study, we're going to look at a different mine plan where we can increase possibly the NPV and reduce the payback and increase the internal rate of return. We like to lock in some higher palladium prices when we have the permitting all complete. And just a quick note on this project, we have no option, there's no option on a royalty or stream on this property. And we do have a lot of exploration upsides. I'd get into the metallurgical testing studies, but this has been studied for 30–40 years, and the recoveries are quite good already. I don't know if you guys know much about the palladium market. If you just go down to this simple slide here on page 14 here, the bars on the bottom there are basically the deficit. There's been a deficit for about the past 6–7 years. That deficit's been made up from stockpiles at Norilsk. Right now, Norilsk is mentioned. A lot of people said there's no more stockpiles around. So that's why we're getting that nice move in palladium. So people are looking for a supply of palladium right now, and there's really nothing out there. And again, we are one of the largest ones that are out there. So if you do a comp table of all the different stories, we're one of the nearest term production stories for palladium. To our shareholder list, we have 91 million shares outstanding. We're trading around 60 cents, so it's a little bit up from this old share price down here. But still Sibanye at 12%. Lucas Sibanye, when we sold the project, Zebra is at 12%. Cisco Mining is at 10%. Rob McEwen has a little bit. 3%, and management owns around 10% of the company. So going forward, our plan is to apply for a new listing. We're on the Canadian Stock Exchange, and we're going to look to go in the venture. We're going to begin permitting, start a feasibility study as soon as we can, hire an operation team, and like all the most other stories in here, we're planning on doing a big exploration program to try to have some news for the investors that are out there. And just a quick idea, when I mentioned to you that we only have 90 million tons in our study, there's a total of 180 million tons in our resource. Quick update on the palladium is the only project that we see coming online right now is Norilsk. They're doing about a $10 to $30 billion expansion, depends on who you ask, and that'd be about 1 million ounces of palladium coming to the market. That's the only one that we could see that's actually going to help with that deficit, and so we think we're in the right spot. Being in Ontario, which is pro-mining right now with the Rob Ford government, and the infrastructure and our low capex, we think we are one of the best palladium development stories that are out there. And like I mentioned to you before, we do have a massive land package with tons of exploration upside.